Bloomberg Audio Studios. Podcasts, radio, news.
Nouriel Roubini now joins us with his wonderful books, all that he's done for me over the years, going way, way back, pre-crisis, let me just get Bitcoin out of the way. I don't want to waste time on it. We've had not one but two of our guests emphatically state Roubini's right, it's going to 10,000. Is BitDog going down from 60,000 to 10,000?
I think it doesn't matter. I don't make predictions. It could go significantly lower, could stay where it is. But the point is that, Bitcoin is down from its peak by 50%. The other top 10 cryptocurrencies are down between 60 to 90%. Melania coin and the Trump coin are down 97, 99%. Even worse than Fart coin is down only 95%.
Can we say that on here?
Well, it's a traded currency. So, and, the NFT index is down 95% from the peak. So it was a bubble, has burst. Whether Bitcoin goes much lower or not, who cares? Who cares?
Nouriel, you were saying that you've just come off 3 weeks of travel.
Yeah.
A, where were you? And B, what did you learn?
Well, I spent a good amount of time between Saudi Arabia, Israel, Dubai, and Abu Dhabi. I would say that foremost on people's mind was the question of whether there will be another conflict between Israel and U.S. on one side and Iran, debated in Israel, in Saudi, throughout the Gulf. We don't know. There are negotiations. I would say the Israeli view is that probably it's not just an issue about nuclear bomb, but also about the missiles, ballistic missiles, and the regional proxies. While Trump might just cut a deal on the nuclear bomb alone, that will leave Israel in a weaker position. But we'll see what are going to be the results of those negotiations.
Other than geopolitics, there's been a move, just kind of feeling that, the U.S. maybe has lost a little bit of its exceptionalism. There are other opportunities to invest outside of the U.S. We've seen that over the last 6 to 12 months. Is that something you sense in your travels?
Oh, yes or no. What I feel is people say we don't like the U.S. in public, and then they invest in the U.S.
Yep.
I mean, throughout the Gulf, whether it's Saudis or Emiratis or Qataris, there's no alternative to the United States.
Right.
And I think for a good reason, I've argued that actually I'm a techno-optimist. The U.S. potential growth by the end of this decade is going to be 4%, not 2%. And if you had American exceptionalism when growth was 2%, and the S&P was returning you 12%, including dividends for 20 years, and Nasdaq 16%, if growth is even only 3, let alone 3.5 and 4, then returns have to be even higher. So in the short term, there is now volatility, but that's short-term volatility. If you look in the medium term, with 3-4% growth, and we'll be there because of technology, the U.S. is number one, together with China, in all of the industries of the future. It's not just AI, there are about 15 other ones. Then American exceptionalism is not over. Actually, it's going to be reinforced over time. And there is no other place to invest than the United States because China is risky and uninvestable for lots of good reasons.
Nouriel Roubini with us, folks, with Bulletproof Academics. Whatever your political view is, it's truly outstanding international economics. Nouriel Roubini on tariffs. I'm reading the Morgan One volume on William McKinley. Trump is fixated on the Gilded Age and the benefits of tariffs. I don't buy it for a minute, and I'm looking for McKinley's Buffalo pivot where politicians walk back the talk. Are we going to see in 2026 tariff reduction by the president in some manner like a Buffalo pivot?
Oh, it already happened in 2025, and it's going to be more of it in 2026. On April 2nd, he announced average effective tariffs of 30%, as opposed to the pre-April 2nd Liberation Day 3%. But I said right away that market discipline is going to force him to chicken out and back down. And 2 weeks into that announcement, Nasdaq was down 20%, S&P 15, 10-year Treasury yield were up 80 basis points, high yield spreads up 150. The dollar started to go free fall, and he panicked. And started to do trade deal, and he gave the job to Scott Bessent. And guess what? The average U.S. tariff right now is not 30%, it's 14% and falling because there is a inflation affordability crisis. And every day they cut back the tariffs on aluminum, on coffee, and cocoa, and whatever. No, they're desperate. And therefore, they already chickened out in 25 because the market forced them. They'll do more of it this year because there are, of course, midterm election, and they need to try to boost the economy and reduce inflation. So tariffs are going down, not up.
Has the whole tariff discussion, Nouriel, maybe permanently or at least in the intermediate term, negatively impact just trade the U.S. between various partners, or is this something that everybody can just get past, do you think?
There's been some short-term volatility. There's been some shrinkages of our imports from the rest of the world. My view is actually the U.S. trade and current account deficit, regardless of tariffs, is going to widen because from a macro point of view, the trade balance is not exports minus imports, it's savings minus investment. And U.S. is in the middle of an investment boom driven by AI and technologies of the future. It's like an emerging market, they find oil or something. When you have an investment boom and your domestic, private, and public savings are lower, then you have a current account deficit. So our current account deficit is going to become larger, not smaller, even if you have 30% tariffs. That's a macro view. And it doesn't matter because the inflow capital, equity investment to finance it, FDI, VC, startups, you name it, portfolio investment is going to finance that. So not only American exception is not over, the exorbitant privilege of the US dollar is not over, and even the weakness of the dollar is only short term. Over the medium term, with 4% growth, the dollar is going to be much stronger and the euro is going to be much weaker.
Are you predicting an advancing dollar from here, or does it have to weaken down and then we get a bid on the dollar?
Listen, in the next few months, it could weaken more depending on relative monetary policy. But I'm asking myself, suppose you are 2030 at the end of this decade and US growth is 4% and Eurozone is stuck at 1%. Real interest rates, real exchange rate depends on real growth rates.
No, just because of time.
The euro has to be well below parity.
Paul's question here was brilliant, and I got this in. Are we stealing investment from other parts of American enterprise with all this money going into AI technology and data centers?
No, I don't think so. I don't think so because, first of all, to build all the AI data centers, there's a supply chains of construction, of equipment, of everything, cooling, heating system, you name it, the chips, supply chains, and so on. And, and this booming capex is maintaining economic growth strong, and that's going to be good for the economy and for many other sectors. And secondly, it's not just the hyperscaler Mark 7 are doing investment in AI. If you are any S&P 500 firm today and you don't have an AI strategy, you're dead. Because you could be disrupted by a competitor or by a tech firm or by whatever. So everybody's trying to play with AI. Now, we're not yet seeing the significant increases in productivity growth. We see them at the macro level, by the way, but we don't see them for every firm. But profit margins for every S&P 500 firm has increased. Real revenues for all S&P 500 firms have gone up since ChatGPT has been launched by 15%, so 5% per year. So there are already signs that there is this increase in productivity growth across the economy. So everybody has to have an AI strategy. So everybody's doing capex. It's not just a hyperscaler story.
Nouriel, can this economy grow at 4%, as you suggest, with no immigration? Do we need an immigration policy that allows population growth?
Well, we need it because we have a bottleneck of skilled labor. TSMC is building a factory in Arizona. I spoke with people in Taiwan. I said we don't have the skilled worker in Arizona, so they have hundreds or thousands of engineers of TSMC going there, initially for a few months, now they'll have to be there for a few years. So you need a more intelligent immigration policy with more H-1B visas so that skilled workers can work in the United States. But even if we had net migration that was close to zero, I think the increases in productivity growth driven by the technology of the future, and AI is one of the 15 of them. Everybody's obsessed with AI. AI is just one piece of the story. There are 15 other sectors where there is a productivity growth because of technology of the future. So that's going to lead to an increase in productivity growth regardless of job creation. That's why there is a gap between GDP and jobs, because there's a booming productivity growth. So that's what's already happening. We don't have the workers. We are cutting back on net migration. We are deporting people. And growth is actually accelerating rather than decelerating.
Nouriel Roubini with us, folks. We welcome all of you across the nation. We welcome you worldwide as well, from Istanbul to Tehran to Tel Aviv and then on to Italy, which is Nouriel Roubini out of a suitcase in his childhood. You have a perspective, old world, new world, like no one I know, because of your tumultuous childhood and your superior, brilliant academics at Peconian and others. Nouriel, how do you see America after this second term of President Trump? Do we go back to the processes, for example, you had serving in the White House with Bill Clinton? Do we go on to a new populism? How do you see us after Trump?
I think that Trump is going to be more a temporary exception rather than a radical change of the U.S. Yes, there is a little bit more populism because there are plenty of people left behind. Some of them vote for the progressive, some of them vote MAGA. But there'll be the strong increasing growth. I think that after midterm election, if the GOP loses the House, Trump is going to be a lame duck. Anybody from J.D. Vance to Marco Rubio to a bunch of others are going to say, I want to run. Great job, president, for 2 terms. Even the Supreme Court is not going to allow him to run for a 3rd term. And therefore, he's going to be lame duck, and whoever is going to be elected, maybe with the exception of J.D. Vance, but even a Marco Rubio is going to be somehow in between the traditional, George Bush Republican Party and more populist one. So, and with stronger economic growth, I think some of these backlash against liberal democracy and free market is going to shrink. There'll be some of a backlash, but I think with higher growth, some of these concerns about inequality and other things are going to be lessened over time.
Nouriel, with all your travels and all your contacts around the world, is the U.S. leadership position, which it's held generally uninterrupted since the end of World War II, is that changed? Is that done? Is that framework no longer in place, do you think?
Well, even our friends and allies in Europe, in the Middle East, in Asia are unhappy because the U.S. is behaving like a bully. But NATO is still there. We're going to find deals on trade and other things. And think about the Europeans. Do they really want to use defense tech of China and AI of China and be in the Chinese orbit? Of course not. So they have no option, and they'll have to essentially spend more on defense, be part of NATO, buy even more American weapons. Right. And there are going to be 2 technological stacks that are going to be completely de-risked. Right. Because there's going to be a U.S. stack and a Chinese stack. And if you are a friends ally of the U.S., you don't want to be subject to the spying and being within the firewall of China. So right. Europe and friends and allies have no choice. They have to go with our technology, with our defense, with our own system, with our economic channels. They'll do some trade with China, but on the stuff that is really sensitive, they have no option by going with the U.S.
Nouriel Roubini and Richard Clarida have sat in this chair, Adam Posen sat in the chair, and others to discuss the next chairman of the Fed. Are you comfortable with Mr. Warsh? Are you particularly comfortable with him that he doesn't have the academic say of Richard Clarida? He wouldn't know DSGE theory if it hit him over the head.
That doesn't bother me as much. And he was at the Fed before, and even Powell has done well while being a lawyer. I'm more concerned about his views. The view that you can, because of AI, reduce the Fed funds rate is wrong, because even if AI will eventually reduce inflation, it's going to increase potential growth. So the equilibrium real R star is higher, while the nominal, because of inflation, could be lower, and it's going to be a wash between the two. So on one side, real growth implies high real rates. On the other side, lower inflation implies lower nominal, and it's a wash between the two. So that doesn't justify a lower Fed funds rate.
Too much Euclidean dynamics here. Waller, I asked him, do we need 2 R stars? Because we got an American Nouriel flat on their back that is not part of this AI productivity experiment. Are we living 2 R stars right now?
Well, we live in what everybody refers to as a K-shaped economy. The top 10, 20% is doing very well. The bottom 50% struggles from paycheck to paycheck. Even if we're at full employment, at least people have jobs. But even if you were to cut policy rates in an economy is near full employment, you're going to fuel only inflation, and inflation is going to hurt more the working class than otherwise. So the solution is not going to be reducing the policy rate. If you are worried about inequality, you have to do stuff like providing education, skills, retraining, and all the things we're not doing to make sure that those who are left behind are not left behind. It's not the job of monetary policy.
Your PhD advisor, Jeff Sachs, did the book 15 years ago, folks, predicting all of this educational failure in America. I got 20 seconds. When's the next Roubini book?
I usually write one every decade. Crisis Economics was 2010. Megathread was 2022. So maybe something on AI and how the world is going to change, but it's going to be by the end of the decade, not anytime soon.